Hello guys, welcome to a Trading Parrot. 3 days ago, I asked my community, what do you guys think? Are we gonna go sideways, V recovery in all-time high, or are we continue down and fast? And the option that got more votes was a V recovery and all-time high. In today's video, I'm gonna show you what is the challenge to get us in that direction actually, and why we are seeing a little bit of sideways at the moment. Understanding a little bit more of the picture, not just from the point of view of seasonality in August and September, what we should be expecting, but also from the data. The data, I'm talking about the people taking the profits, institutions changing and shifting, possibly accommodating against the seasonality, and not just that, the tariffs and the general markets picture. I haven't done any changes to my position. I'll give you an update on that, but there has been some slight twist in the approach that I'm planning to apply to that position going forward. And that is based on liquidity pools, levels of support and resistance, and what I'm seeing as well on the RSI. Make sure that you do not miss that part. At the end of the video, I'll cover general markets and a little bit of the Bitcoin dominance and Ethereum dominance that is giving us some clear hints of how the market is positioning itself against Bitcoin and the implications that that has towards the altcoins when thinking about the end of the year. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. If you missed the live with Vinny, I had him as a host. As you can see, very frequently I bring people from different platforms. Sometimes we talk about on-chain, sometimes we focus on heavy data-driven technical analysis. If you want to learn how to use these tools, I strongly recommend that you don't miss this live that we did yesterday, not just because it's packed with information for people addicted to data-driven trading, but also because there is a code to get a 40% discount in the description of that video. So if you've been waiting to get your hands on high block capital, go for that, and you are supporting the channel as well. There's been a lack of interest in general in crypto in the past 2 weeks. There's been a shift between liquidating shorts into liquidating a bit more the longs. We'll cover that in the charts, but looking at the Google trend, that is supporting that thesis that we are kind of entering into that depressive state of August, September, where retail tends to get screwed over before an October recovery. At least it's rhyming pretty well in that sense. You can see how much hype there was on the altcoins up until, let's say, end of June, and since then the interest was pretty much rug pull all at once. From 61, the interest slashed less than half. Axel is saying that the market has formed a resistance level at 112. This is a good sign. However, the 112 to 105 range remains a weak link and acts as a buffer separating Bitcoin from a deeper correction. And I think this is one of the takeaways that I want to mention when it comes to adapting to this with my long position. So far, my long position is a small position, so it's pretty manageable in terms of averaging down if we get a deeper correction. At the moment, it's sitting at a break even, and there is some upside to be had. There is some likelihood of some upside, some motivation around 118 to 120 to hit those liquidations. And there is also the potential that people might trade the rumor towards the cut of the interest rates. At the very least, trade the rumor, not necessarily the news. Short-term holder 1 week to 1 month realized price sitting at 117. This entire cohort is currently at a loss, guys. And when you basically play with people's emotion and you keep these short-term holders in pain for long enough, one by one start giving up and closing at a loss. We need to look at the short-term holder charts, and we need to look at the SOPR. The SOPR is going to tell us and confirm at what pace they are currently closing those positions at a loss. If that speeds up, we could go and hit the short-term holder median prices. We need to look into that too. Where is that price located at the moment, and at what pace is going up or down? Why? Because that could act as a magnet, right? People closing at a loss eventually will go back into the median at some point if it plays out. The short-term holder, well, here it is. Realized price is at 105. It's been coming up. A few weeks ago, it crossed 100K. So now that level should act as a strong support in case of strong negative news. Not necessarily it has always held the price. As you can see, sometimes actually it's the blue line, but in the past we have crossed that line and been below it. I'll show you in another chart later. Ethereum has some signs of strength against Bitcoin that we're going to look in the Ethereum dominance later, how quickly it has recovered. It has recovered when it had hit that resistance. I'm impressed with that, by the way. But the open interest in Ethereum is increasing very fast. And in fact, on Bitcoin, it has decreased. The interest on Bitcoin it has shifted very clearly towards Ethereum. I'll show you that too. It has gone from 59 to 47 on Bitcoin, whereas on Ethereum it has spiked like crazy into 35%. Here we can confirm some facts as well. Martin is also saying that the short-term holders keep capitulating. Over 70,000 Bitcoin have been sent to exchanges at a loss since July 31st. This is an extended period of pain, and Glassnode is showing us the same thing. So many analysts looking at the on-chain data are confirming that short-term holders are having a little bit of a panic situation at the moment. Bitcoin has broken below the key support at 116k, entering a low liquidity zone. ETF outflows, cooling funding rates, and weakening profitability signal post all-time high uncertainty. Is the bull trend on pause? Learn more in the latest week on chain. You can see that the short-term holder is sitting at 106 on Glassnode. We can also see that the ETF flows in the red in here are hitting this band where we can get below 1.5k. The air gap that they're talking about is situated around here. So from 114, 113 going slightly below, you can see that there is an air gap in here. Well, and that is a clear level that we need to defend if you don't want to go one level down in the ladder. The air gap is also visible in the cost basis distribution heat map. There's been distribution around the top levels in here, and there is some supply that has been acquired in this area as well. We got one bearish news, which is to do obviously with the ETFs that have been bleeding for 4 straight days in a row. Although finally yesterday we have one day in the positive with 91, but it's been pretty intense because this all together is obviously over 1000 in the negative. But if you focus on the overall picture, you can see that there's been a huge strike in here around the proportions of the previous strike up that we can see up until end of 2024. Interestingly, on Bitcoin there's been 4 days of very intense distribution on the ETS, followed by one very mild day in the green, whereas in Ethereum there was just 2 days of intense distribution and already one day before the accumulation resumed. So that shows a bit of strength against Bitcoin to start with. Let's see the other evidence of that from other charts too. And why am I chasing these patterns? Because Ethereum is the key boss at the moment, assuming that Bitcoin holds levels and it doesn't puke. It's kind of the second word on the table to say, yeah, we could still see the altcoins effectively experience an altcoin season. If Bitcoin is just holding right here, but Ethereum has a mini shake with a huge puke, let's say below 3000, and it loses structure, well, we got a serious case of no altcoin season incoming. Michigan State Pension triple stake in ARK Bitcoin ETF, so we got more institutions entering the Bitcoin market, and we have a 6 out of 10 Bitcoin realized price metric climbs as investors keep accumulating. I'm not fully sure about this news. I will put it in pause and say, there's been a lot of distribution too. Be always careful how you read the news and confirm the facts. Something that has been affecting clearly the markets, influencing things, are the tariffs. Although general markets had a pretty good day yesterday, we can say, but let's have a look and let's catch up with what's going on with the tariffs. It's been in the past 2 days a double down in terms of tariffs campaign, and the market has been a little bit up and down too. On August 6th, President Trump signed an executive order imposing 100% tariffs on imported semiconductors and an additional 25% tariff on goods from India. There's been also a bit of pushback on Trump on India financing certain goods to Russia that I cannot say in the video. August 7, US Customs began collecting 10 to 50% duties on dozens of trading partners' goods, with traditional relief in shipments already en route until October 5th. Reduced baselines rates were negotiated with the EU, Japan, South Korea, and the UK, while Canada, 35%, Brazil, India, all of them are facing steeper levies. The market reaction, well, Bitcoin views some as a risk-on asset, but also a potential haven. Bitcoin rose 163% to 115.5, which is currently our resistance on the 4-hour. We'll look into that on August 6th amid safe haven buying as trade tensions escalate. Whereas on the US equities, on the 5th, the S&P and Dow ended lower. On the 6th, stocks rebound in upbeat earnings. That helped pushing things back up. Notably Apple, which is, well, currently kissing someone's ass, to get things to cool down. Remember that Apple is being strangled to produce all their goods within the US, and Trump is looking very proud of having achieved that. Well, they have achieved an agreement on what to do. Not necessarily they have succeeded yet. There's a lot of water that needs to go under that bridge before an iPhone can be produced in the US. And hold on to your iPhone, because the next time that you buy one, it might cost over $20,000. I'm just joking around, but I'm sure there's gonna be a steeper price to pay for the next American produced iPhone once we get it in 20 years in the future. In my Patreon community, some members are sharing some questions in here that I'm gonna cover in just a second, and I wanna make sure you are up to date with the Bitcoin status. I have updated all the lower time frames. To beat the KYC and non-KYC exchange at the same time is introducing FX futures trading with a new pair Euro USDT. They're gonna be bringing new FX pairs to the crypto exchange, which is pretty good initiative. I am currently hosting a trading competition with them. There's still 18 days to be part of this. The link is in the description to register. Of course, you're gonna need an account. If you open the account also with the link in the description, you get $50 deposit straight away in your account as soon as you sign up. And if you start depositing and trading with your own money, you can get up to 30,000 in trading rewards. So one of the questions is about the selling walls. We'll cover about that, and we're gonna now go straight away into covering levels on the 4-hour and daily time frame. Remember that in just a few hours at 12 p.m. UK time, we're gonna have a live stream with my elite members. We'll be covering the coins that precisely they were requesting. This includes ENA, Uni, Solana, Link, Plum. I never seen that one. Ethereum, XRP, AVAX, and CRV. In order to be part of choosing these assets that you want me to review once per week in the private session, you can join my elite tier on the Patreon. The link is in the description. Right, so another sign of weakness at the moment in the market is that the aggregated open interest has taken a steep dip down in here into losing the first line of defense, which is this blue line in here, and now it's facing the horizontal one, right? That there is about to get lost, and we are starting to go in the previous range with the open interest. When the open interest does something first, notice that the Bitcoin price is bouncing in here, right? But the open interest is starting to enter this area. So we use that as some sort of leading indicator that has pretty significant accuracy determining direction of the price. It's almost like the open interest pukes first, then price goes up and says, no, I'm actually going up, but then open interest continues down and down and down and down, and then eventually it drags down the price too. Same in the other direction. We use it to trade on the way up, to be on the long side, but if it starts pushing down for a sustained way against the price direction going up, we need to be careful with those longs, because pretty much people are exiting the market. That's what it means. In terms of CME gaps, we have nothing new. Since yesterday, we just tracked the two levels that are below price on Binance. At the moment, we don't have anything until 97K. In terms of the Bitcoin status, you can see in here that the 4-hour global breakout is still in play. It's a very noisy. We'll look into that, and the daily approaching daily resistance is the most important thing. So far in here, we are putting a double bottom, and make sure, guys, that you unfollow all the accounts that bring this sort of patterns the moment they are already formed, when they are already completed and you're hitting the neckline, or even worse, if they tell you we're breaking out from a double bottom, that is too late. It's absolutely useless to see a pattern already completed with all retail already potentially trapped in a fake out. You can see that patterns are probably 50% of the time only playing out, if not less. Anti-patterns, a breakout failure, is currently playing more often than the actual pattern. So why do we bother looking for patterns? Well, because we can counter trade them, we can see the signs of weakness, and then say, well, maybe this pattern won't last for very long. People are gonna say, well, this pattern is pointing towards here, and we're gonna cross all this resistance at 118 that we have identified before. Is an order block there as well, and there was a few more things that I don't remember. A couple of days ago I mentioned it. If we can get there, of course I'm gonna be very happy with the long, but if we start seeing weakness around here and we have plenty of things in the way, there's motivation to go up, don't get me wrong, but the first challenge is to break this white line descending in here, right? That is heavy resistance that has pushed the price a 6% in just a couple of days. So when we meet with that, we are gonna be completed hitting and filling the gap, the fair value gap, up until 116.7. So that's first challenge. I will say the biggest challenge is the point of control at 118. If we can cross that, or just reach out with a hand intra candle and grab the 120 liquidity and then make another move down, down, that will be phenomenal. But if we cross 116.7, we are already entering, reclaiming the support. So that could be bullish by itself. So personally, I want to see if we break out, assuming we do, no one is stating that is for granted. But if we break out 115.500, once we get to 116.700, we need to make a very tough decision. Do we believe the rally? Do we think that we're going to cross the 118? It's going to be your decision, not mine. I will let know what I do to my Patreon members, and I'm going to publish it in the next video to make it public. Of course, everybody can access all that information historically as well. But this level around here, slightly higher, like getting into 116, 116.5, still can constitute just a dead cat bounce. And that is my worry, right? That we reach to this fair value gap and then we do the C wave into 108 or at least sub 110. I have updated all the levels on RSI, on the 4-hour and daily, so stick for that around, because we are gonna see what is the most bullish support at the moment and what is the next levels if we lose them. So we are at the moment on a 4-hour move from the global support in here. Starting, we have fully reset the 4-hour, we have put a double bottom in here, and we started climbing. It's been a very, very noisy area, this area in there, but we're gonna ignore that. We're gonna let it pass and say, well, we are in the middle of a move up with the RSI, and our most bullish support at the moment is around the RSI 50, maybe 49, something like that, because of this white line in there. So let's update this. I'm gonna say 49 because I put it too high in the line. This should be more like maybe 48.5. I'm trying to be very accurate this morning as much as I can, but let's see where is that in the price. So we got this support at 114.400. We have a fair value gap that we have already filled, and then below that global support is at 108.4, and the 85 global resistance is at 128. Of course, we have so much in the way to get there, but just in case something completely flips in the market, it takes us by surprise. We already have our long, and we know how far is on the table and how many challenges there are in the way to get there. In terms of volatility, there's been a huge reset in here. So that volatility is saying, well, we are due for some breakout. We should continue this breakout because of all the signals that you have there. You can see in past performance, when you have all these extreme levels of P in terms of volatility in there, in the light green, well, there's always some sort of bounce. Here you have another hive of volatility spikes, and we are in the middle of one. So it's natural to think, well, maybe there's going to be a breakout. How high it can get, that is what we are discussing. And the fight is also happening within the pivots of the SOPR. We haven't put a single day above it. We've been just rejected, and we've been held by the 3 levels. So the battle is going on inside that, which is quite funny because we usually jump around. We are never for so long inside. It's been already 4 days that we are inside, maybe 5. On the daily, I have update as well on all the levels of the RSI. You can see that I move this line. This is going to be probably the 3rd or 4th time that I move it down and move it down. Now is against that level in here. That means that support is 40.72. Global one is 25.84. Resistance for continuation up is 52.78. And top of the range is 84.80. So let's go into the price and let's identify where is the full sandwich. So we got that immediate support at 112.170 on the daily. That is currently our support on daily. Our resistance on daily is 116, and that makes a lot of sense because it used to be previous support. Top of the range 146 on the daily, and go and get some tissue because your mouth is getting a little bit humid. 103 is the global support at the moment, and now I need the tissue. No, I'm no longer in that short, I'm in a long at the moment. If you're looking for a short, maybe if we get here at 116 and we start pinching higher than that as we approach that weakness, if we see something interesting going on in the order book, we could enter again a short. Momentum on the daily has been slowed down in terms of momentum down. So we were kind of accelerating on the way down up until the 2nd of August. But since then, that momentum down is kind of shrinking, and this is curving towards a potential bull cross. But let's not count victory just yet on that. Just a heads up that that is currently going on. And I have also put this ascending wedge, which is a very bearish pattern that we are currently inside. I have moved this line from here because there was a breakdown, there was a retest, but there was no follow through. Okay, we just did sideways. So I'm gonna put this in here and be a bit more strict with the rule of the breakdown. I'm gonna say now we have higher expectations for the breakdown. We need to break below 114 in line with the 4-hour, but the daily says 112 gives that breakdown confirmation. But remember, you don't wait for 112 to start shorting. You don't short support, okay? You short resistance. You short above resistance on weakness and on expectations that you're gonna get pushed back down and you're gonna produce a liquidity hand. In the liquidity hand at those highs, if you're right and if you manage your risk, then you get yourself a golden short to go towards those lows. Why? Because you enter at those highs, and if you did the right analysis and the luck was on your side, when the price comes down, if it comes down and it meets with the support, you're gonna be in the green. If that fails and comes back up, you can even close at break even in a situation where you were absolutely wrong. That is a position of advantage that everybody should be looking for. Much better than trading the breakout. On the weekly so far, we are holding these levels around here at 114, but remember, we need to reclaim 117 to say anything on the weekly. Otherwise, the bearish signals are still valid towards the case of going into the bull market. So bad. We have this week to do something about it, but so far we haven't done anything. And thanks to that, the stochastic RSI is opening the mouth saying, okay, I'm gonna start accelerating below 80 and see how low we can go. If we do that, the MACD might follow through again, in which case we have that weekly support at 52. Currently is the price of 105. And yeah, guys, I can confirm that there's been some distribution, some panic selling from possibly short-term holders because the SOPR is pinching the first band of 1. After having been this high, 118, being at just 1, we are in the completely extreme of closing in the red a lot of position. A lot of people that bought this move up in this range are currently capitulating. If the capitulation intensifies, if they capitulate too much, we might get a chance that this recovers and goes into the top of the range. If instead of that, they stop selling at a loss, then the price will have to punish them a little bit more to enact, that behavior again, because market likes to reverse once they fully capitulate. Think about this. These people are lemons and the market maker is squeezing the lemon. The market maker looks at the lemon and says, oh, look at that, so cute. There's still a little bit of liquidity. Let's compress them a little bit more. Once this band hits the lower percentile, you can tell that that lemon is pretty dry and you're ready to throw it to the bin, and then you can reverse in the other direction. Pretty much rinse and repeat. And net taker is at very extremes at the moment of the red. That means that aggressive sellers are currently operating in the market. You can see this level has reached 10, and within this cycle, let's see what has been the biggest level. The biggest has been at the top of the megaphone pattern, and probably that was me because I was aggressively selling there. I'm part of that red there because I sold a heck of a lot of Bitcoin there, and I started buying at these 3 lows in here. Publicly in the videos, you can watch that as a full season of Game of Thrones, and you can see me there accumulating. And now we are as low as that, right? So this is very aggressive selling, guys. Another reason to be very careful, it's meaning that if you are in a long, you are trading with people that are very aggressively dumping erratically in the market. That can shift at some point, but it needs some sort of incentive to you turn into now aggressively buying. If they are aggressively buying, taking a long is a lot easier. That doesn't mean I'm just gonna close my long in a loss. This is kind of a double-edged alpha because we are so low in here. This could take a dip, but that dip could be a great opportunity to add to that long. Why not just closing the long if the situation is like this? Well, I guess you can. I just want to have my toe dip into that potential for going into 118, 120 and take advantage of that. After all, the open interest is here at the low levels where we should be looking for entries long. So there is an opportunity as well, and I want to be exposed a tiny bit to still put a laugh in the next upcoming days. Another reason to be very cautious is all of the deposits that we've been having. As of today, we have another 9,000 hitting exchanges. So there's also some 7,000 that is reducing that gap to just 2K. But guys, still the delta is negative in this area. That's why the stochastic applied to that is showing us that we are at 1.5 and just sticking around that level. Look how sticky, how long we are at this 1.5. It's from 17th of July and we are at 7th of August. It's gonna be almost a month that we are dominated by deposits into exchanges. So don't try to find explanations. All they want to use it as collateral for a long. Oh, they are depositing because no, don't look for explanations. Just look at the bubbles and act accordingly. actually, or be cautious in an according way, not panic sell, of course. We continue to see the sell. Of course, the price hasn't moved that much on Cerberus. If price starts pumping, we can reverse this sell and delay it a little bit further, but staying in here is just going to confirm the sell signal. That sell signal in a bull market is kind of 50-50. It's kind of a signal to say, well, we are going to start resuming from here. We got a bunch of them that were the precise moment where you need to buy. This one was the precise moment to sell. This one was the precise moment to sell, but with a caveat, there was a higher high after that. So you could have bought as well with this. This one was a level to buy, and this one, who knows? Right, liquidity pools. Let's see how they have progressed. Yesterday, I didn't put a video, so I'm curious to see what's going on in here. Degens continue to be very heavily accumulated on the top end. I cannot see if it has changed because it was already in the red. I'm sure that there is tons of shorts entering here. On the low end, we don't have a lot of additional red. I will have liked to see also some degen adding into the area of 106 or 107 to make a big case for a short on the C wave that we've been talking. If we start looking at 25 and 10x, you can see that that is the biggest level and is the best argument to see a C wave incoming. Another reason to think about, hey, watch out with your risk longs, okay? Because there's been an overcrowded event in here. So many longs have entered that they place a liquidation pool at 112 and another one at 111. So those two were not here 2 days ago. I remember this was flat and we had the 120 and it was the only thing standing out. But at the moment, we have a level that is closer to the price that is almost as big as the 120. So the big question now is, will market maker just go and take the 120 and leave behind this level there? I'm a little bit thinking that there is a good chance that we first take one or two in here. So there will be some people that are gonna think, okay, I'm break even, I'm gonna close my long and ride it from lower. Well, it's like flipping a coin, right? So if you close your long in here and somehow we break out and we manage to hold against the odds and hit 120, you're gonna grab your head and hit against the wall, or maybe you just don't care. It's up to your personality as well. And that's why my middle ground is a small position that I can average down if we go into here, depending how we land there. Of course, if there is a huge global macro event dumping all general markets, I'm not gonna average in this area because I'm willing to do this if it's just part of the typical daily volatility, not if it's a black swan event. In that case, I rack pull my limit orders. I actually have already removed my limit orders on the lower end. I have the levels in my head and I'm gonna apply them accordingly depending what I see on general markets. Let's look at the order book, and yeah, there is a lot of selling pressure in here. My community on Patreon has already noted that, and the purple whales have been declining in activity massively. Look at this. The past week they took that long, they rack pulled the rest of the cohorts, they went home with the profits, and this week there is almost no intention to being exposed to the market. Very mild exposure. The activity is across the largest whales, 1 million to 10 million, and the green ones, which are almost the smallest ones, from 1k to 10k. Those dudes sometimes get it right, but most of the time are in the wrong place. So I take this as a decent alpha. Purple whales, not interested, fair enough. Let's look at the order book, and we have that resistance there that doesn't really want to let the price to break out from the pattern. Indeed, there is an interest into shorting this up until 116.6. That is what the order book is currently showing. Of course, this can change in a fraction of a second, but I'm just showing you a clear picture of what's going on right now as I'm recording. This is setting a little bit the odds for big upside in the short term, kind of low. The CBD is pointing down, open interest has been flushed. You get the point. Bid versus ask is either in the negative or flat. So that means that the support is pretty thin at the moment. You can see that we have entered an area in here. The four top levels are bid versus ask, and they're almost all of them in the dark at the moment with 30 percentile, 29, 24, and 36. That means that orders at the top are definitely winning against the amount of volume that is below. But I'm talking about all deviations: 0 to 5, 0 to 1, 1 to 2, 2 to 5, 5 to 10, 10 to 20, and 20 and beyond. Funding rates are in the positive. Oh wow, okay. Longs are at 56. Whales are definitely not interested so far in this price action. The delta is at 28 in terms of liquidation levels, so nothing really substantial to make it an alpha. I think this is the line that that I care at the moment. For the breakout, we are continuously battling to break that 115.5. Be mindful of the fake out, because the fake out can be in this way, it can be in this way as well. So manage your risk, think about how to ride it in case one of those played out. Of course, this can also have something like this and go there if we get lucky. Now, it can also happen that it just pukes straight away. So I think I'm covered for all these cases in terms of my personal planning, right? So I have the intention and I am prepared to deploy NDCA against other levels if we get a larger puke, and I'm prepared as well to take milder profits, more humble ones, if we go higher and we see any weakness or those shorts getting too cocky. Interesting, because general markets are not in a dumpy state. Indeed, yesterday it closed kind of like a mixed bag, but you can see that for the week after the red candle there's been some recovery, right? So we could even argue that we are kind of ranging around the 6.3k on the S&P. Even the Nasdaq put an engulfing weekly candle in here that if we manage to defend now, it will be magnificent. But of course, we are now only on Thursday, so there's still today and tomorrow to define the closing candle. Notice that even with the green engulfing candle, that doesn't necessarily yet bring a higher high in the momentum. And if we exclude tech from the S&P, you can see that we are still below resistance. So it's the tech that is definitely driving all of this at the moment. And we put a new low in terms of the altcoin season index, now at 37. The market is not looking that bad for the day. Let's have a look at the patterns on USD against total 3. We're just holding that neckline, so that is not looking great from this point of view. We want to go into the 20, into the 16. We want to lose that level and continue on the way down to get some altcoin season. But the light at the end of the tunnel at the moment so far is Ethereum and the Bitcoin dominance. Those two are still saying we might as well get some upside. Maybe we need to wait a little bit longer, because Ethereum in this bull flag against that resistance is kind of doing a huge heroic effort to continue with the breakout. So there must be some rotation from Bitcoin and everything into Ethereum now. Of course, there's been one, but I'm saying it's continuing. It's resisting all the bearish signs that we are seeing, contrarian to what I would expect at this point, which was to cool down into the moving average, into the 21 weekly or something like that. But no, it's attempting to continue already. The USD dominance is in the squeezing here. We still don't see a breakout or breakdown. There was a reclaim, as you can see. That was bullish for USD, not so bullish for the altcoin. So ideally, we want to see now a rejection from this resistance and the USD to continue to decline. That is going to help the altcoins. You can see the Bitcoin dominance is battling with reclaiming and holding that new level as a support for additional move up. And what we want to see is a rejection, right? We want to see the Bitcoin dominance to continue to lose that level. That is where all eyes should be at the moment in terms of talking about altcoin season. What we don't want to see is a reclaim of this line. And if we see it, we want to see just a mild move into 50 and then rejection still. If we start going into 16s, into the median, well, we're going to get into 70, and that's going to bring also the dominance into very high levels. At the moment, we are talking about a 70% dominance. Not nice to ride any altcoins in that situation if it happened. And look at Ethereum from another point of view, is holding really nicely there, is putting this candle that is telling us a story, is telling us we were just selling off up until 3.3k, but the bulls step in so aggressively that they managed to put the price even to a little bit higher, into 3.728 now, and that is kind of pushing on heaven's door, right? Is hitting the global resistance, not yet, but almost there. We are at 60, and at 61 we put a monthly breakout, and this is a monthly breakout, whole history of Ethereum, as you can see there, or at least from 2018. Guys, thanks so much for watching, and I'm gonna see you in just 1 hour in the Elite live stream that is gonna go live tomorrow. Tomorrow you can watch the video on all these altcoins. Of course, my Elite members are gonna be live with me. They can ask me questions, and they are responsible for determining which coins we review. If you decide to join, just be aware that I'm gonna pause billing on Patreon for about a month, taking some time for myself. And even if you join now and you join next week's session, which is probably gonna be the last one, then for a full month you're not gonna be charged, because there won't be any events anyways. And let's do a very quick wrap up. I think I mentioned all these points already, but people really like to see the wrap up at the end of the video. I guess some people are skipping to the end of the video to see just the wrap up. The 4-hour is still in a healthy state with this move from the bottom of the global support, and we have some support coming in at 48. That is very close to the price. We are doing everything that is needed at the moment for a breakout. I'm not surprised if we get the breakout. I think there is some appetite to hit some levels right next to the price. My doubt is, can this survive up until 120 and really go into all-time highs within these circumstances? I think that's debatable. Let me know in the comments if you think that is so easy and why, but I see it in the other way around. With so many signs coming from different angles, I'm kind of preparing to be more humble in my profit taking on the long, and I'm kind of putting more emphasis on being able to adjust my position if we fail on this breakout, or if it's a fake out, if we go into 117 and then we see a rejection back below the previous range. Watch the full video really for all the explanations of why, but I think I gave at least 10 reasons that are showing that there is a small shift, a mini season now that it kind of sucks for the longs. Now be aware that under those conditions is where you find your best longs, so you need to be also on the lookout for longs, because we take longs where there is big capitulation, and there's currently one going on with the short-term holder. And no, I'm not saying short and long or price can go in both directions. I am in a long, so that is ultimately the last word, right? I am in a long, not subject to interpretation or, oh, he wanted to be right on both sides. None of that crap, really. Thanks so much for watching. I'll see you in the next one. Bye bye.